There you go.
Hello traders, Cousin Vinny coming to you from theclosingprint.com. In this edition of your weekend video newsletter, we'll discuss the major accumulation day that we had on Friday, the second one we've seen in over 2 weeks. We had all of the indices moving higher, with the exception of the Nikkei and the Bombay Stock Exchange both moved lower. The bond stock ratio is bullish. Short term inflected last week. We did see some positioning in institutions 2 weeks ago Thursday. The Dow Composite is bullish. We need to see follow through, and the S&P 1500 is just waiting for a buy signal. It looks like it's turning in its cycle. All of the FANG stocks looked good with the exception of Apple, which everyone knows about. We have institutional sentiment with tick bullish. NIMO is turning in its cycle. I think you'll be happy to see what those charts look like. And the NAMO also from an extreme turning back up last week. We have the S&P 500 equal weight index, A50R at extremes. Those are turning up. We have a buy signal on CCI as well. NYHL has crossed zero. That's a good sign. We need to see follow through there. And the high-low percent is turning higher. The NYAD, New York Stock Exchange Advanced Decline, is also bullish. And once again, we had a major accumulation day on Friday. The significance, of course, being portfolio managers busy at work, buying everything across the board, as we'll see in a few minutes. The S&P 500 equal weight index, no stock is more important than any other by weight. We did break above previous weekly highs, as you can see. The next previous week high is at 50% retracement. We did get a CCI signal just after the holiday, so look for a follow-through with washout lows in the S&P A50R. Number of stocks trading above their 50-period moving average is only 11%. So 89% of stocks are below the 50-period moving average with room for improvement. Typically, we see sustainable rallies when we get to these washout lows. Breadth is also behind the bulls, creating a tailwind with the S&P 500, the mid caps, small caps, and the NASDAQ all trending higher. Once we get to the 30 level, we'll start to look for a lower high in this ascending pattern that started in September. With RSI oversold, we could see a bounce. We still have room to run to the upside, but we do have the 3-candle reversal now. We're looking for a follow-through at a minimum with overhead resistance right along this level, with the target this week just north of 260. In addition, Rinko continues building white bricks, looking for a follow-through. The cycle is up. And of course, the 60-minute is producing higher lows and higher highs. We have this Kirby overhead. So resistance does start to kick in right around the top of this candle on the 60-minute time frame. Know your time frames, whichever one you're trading. For bullish only equity funds in my 401k or IRA, I'd be looking at the daily and weekly time frames and less at the 60-minute. For short-term traders, options traders, I'd be looking at the 5 and the 60-minute, of course. And we're looking for a follow-through, the 50% retracement overhead, then 257.50, and then formidable resistance really starts to kick in around 260 to 262. Of course, tick cumulative giving us the thumbs up continues to trend higher. Note the difference in the trend here versus the trend down with these oscillating moves. This is pretty strong, showing you institutions have been buying shares since the day after the holiday. With those higher highs and higher lows in mind, we did have this major accumulation period right here on the 26th and also on Friday. Looking at the daily time frame, you can see these spikes in accumulation. These major accumulation days typically lead to follow-through, where institutions are obviously picking up shares and portfolio managers are positioning for the new year. We also had NIMO at minus 111, extreme lows like we saw back in February, which lead to higher prices in the short term. Reflecting on the NYSE, we have these overhead resistance levels just shy of 12,000, and then major areas overhead just north of 12,600. The high-low percent is changing course, so the number of stocks making new highs is starting to outnumber those making new lows as this continues to climb. This is bullish for continuation. Look for this to follow through higher like we saw in this bounce here in November, where price action did inflect and move higher. Looking at the NASDAQ for a moment, we also have the three-candle reversal. We're heading into resistance just overhead in a descending pattern. RSI, very similar situation as the other indices, with volume starting to pick up and momentum starting to change directions. Look for a follow through. It's not a guarantee that we're going to instantly move higher, so we'll have to respect these resistance levels just overhead initially to start the second week of the new year. The NASDAQ composite of over 2,500 stocks also making higher highs and higher lows. RSI is above 50, rising, and tick cumulative for the composite is also rising very quickly. The trend is obviously up and should continue higher. Finally, we have the IWM Small Cap Russell 2000 bouncing at this previous level of congestion after a nice move higher in late 2016 into early 2017. We consolidated for several months before breaking higher. That's the area where we bounced. The pivot highs back to the February 2016 pivot lows gave us a Fibonacci retracement level between 50 and 618. Reverse, three-candle reversal. We're looking for a follow-through. Oversold conditions. We did take a position in IWM last week. As momentum is starting to shift, we're also looking for volume to pick up as well to add more to our position in IWM. Additional indications that could lead to follow-through. We have NAMO, the McClellan oscillator for the NASDAQ. Looking at the black line, you can see the cycle has started to turn higher low. We also have the NAMO back above zero. For the NYSE, just look for confirmation in breadth to be higher for the next couple of weeks. VIX also dropped last week more than 25% from the highs, and VIX VXV showing a very similar fade between the front month and the 3-month volatility indexes. Looking for this to fade back down into the neutral zone as fear dissipates further. Here is the bond stock ratio. As you can see, we've inflected from the highs last week, which is something that Bob Pisani pointed out 2 weeks ago, Thursday on the 27th. At the end of the day, institutions were repositioning, selling bonds, the 7-10-year, and buying S&P 500. That's when we saw that spike in accumulation. So we'll be looking for this to fade further as we look for the 2 and 10-year yields to bounce further off of these lows that we saw last week, which was reflected in high-yield corporate and junk bonds as well. A reversal here is bullish for equities and JNK and HYG. As we can see here, both will reflect an increase in investors' appetite for risk on if you will. If these continue to move higher in addition to biotech and IWM, we have all three of these indicators moving higher and bullish for equities as a result. Therefore, with yields moving higher, we're looking for AGG to start pulling back in. After a 9-week run higher, we hit our targets of 107. We took some profits on Thursday. We'll look to take some more if these start to pull back further on Monday and Tuesday. In addition, if we see a further fade in fear, we would see US dollar fading as well. We saw what could be construed as a left shoulder head, potentially a neckline down here around 93.50. If the dollar does continue to fade, we got the 200 period down below. First target, 618 Fibonacci retracement as well. The momentum is clearly fading for the dollar. Look for that to help internationally based companies that report in US dollars and look for commodities like gold and crude to continue to move higher. Gold did hit its target that we projected several weeks ago at 1300. We got rejected there on Friday, almost to the penny. So that was a good trade. If you did take gold, I'd be scaling out of some. Still in a bullish trend, so until this breaks down below the moving averages, we look like we're going to continue to move higher, especially if the US dollar continues to fade. And the same could be said for West Texas and Brent crude. Coming back down to this 2016-2017 lows where we consolidated for over a year before breaking out to higher levels at $75 and $76 per barrel. We did inflect 2 weeks ago. Last week we had a pretty good follow through on crude stocks, oil and gas exploration stocks. Watch Exxon. That one looks really good, which does sport a pretty hefty dividend. Following through after 2 weeks off of this December 26th low, we continue to move higher. RSI is rising. Watch oil and gas names. They should look good. In addition to other stocks like Anadarko Petroleum, Rig, and others that saw nice bounces last week. The sector heat map has gone from crimson red to lime greens and yellows to almost all green as of the close on Friday. Reading from left to right, you can see how the heat map does flowing from green to yellows to oranges to reds and back. So at this point, we're looking very good and bullish. Note the sectors that are showing the most strength: biotech, oil and exploration last week. And note the ones that are starting to lag a bit, like real estate and REITs, as well as utilities. Here is the IBD 50 for the week ahead. This week we're looking for stocks whose weekly price action closed above the previous weekly close. In addition, we wanted price to have closed above the previous high of the day. So we wanted price action on Friday to close above Thursday's previous high. And we wanted relative strength to the S&P 500 as compared to the S&P 500, showing the stock has been outperforming. The learning sessions, this will help out a great deal. In addition, we have 3 MarketSmith Growth 250 names that popped up on a relative strength scan, which if you have MarketSmith, you could just come over here and this is a tracked scan. So relative strength climbing with the markets in a correction. Prior to the pop on Friday, a lot of these stocks were showing relative strength. Ciena was one, Planet Fitness, we just mentioned, Regeneron, T-Mobile, and VMware. I do like Ciena the best. It did take out the previous highs here. Earnings in March, note sales and earnings continue to climb. The lifeblood of any stock, if you want it to move higher, you want these numbers, the annual growth numbers, to be increasing. Do note it has a timeliness rating of A. I like when this is A or B, but A is the best, obviously. Composite rating of 99. This one looks excellent. Design internet switching systems for the network infrastructure for telecom and cable service providers. We all know how that industry group is most likely going to grow. So keep an eye on Ciena. This one is looking very strong going into the week. T-Mobile also looks good for the very similar reasons. We have relative strength line climbing. We have annual sales and earnings climbing. Note the timeliness rating of A, composite rating of 98, and price action taking out the previous highs of the day. Headed back to 70, 78 very quickly, it looks like, on above average volume. Do note previous earnings beating 22%, 37% over the previous 2 quarters, and looking for a follow through this week. Look for a flag above the 50-period moving average, the red line, in the short term for a better entry. VMware also looks good. Note the timeliness rating of A, composite rating 93. Annual sales and earnings continue to increase. Relative strength line is climbing. Price taking out the previous highs of the day. Look for a break above 140.69, 10 cents above this pivot for a trigger with earnings in late February. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on January the 6th, 2018 with your weekend video newsletter. A watch list will be out later tonight, 11:30 on the East Coast, somewhere around 8:30 on the West Coast. Hoping that this helps. We will talk to you soon. Take care and enjoy the rest of your weekend.